Joining me now is Rakesh Arora. Rakesh, you've looked at the budget, you've looked at the market reaction. What is the sense that you get? Markets are happy by the budget. There is no negative surprise?
Yeah, I mean, definitely it's a case of some positives and no negative surprise. And that led to the short covering that we have seen in the market. Clearly, the government has maintained its fiscal discipline. I think that's the biggest positive. At the same time, they tried to revive demand a little bit by whatever flexibility they had by giving incentives for the real estate sector and rural India. So overall, I would say within the circumstances, it's a decent budget, and I think the execution this year is going to be more critical, which will lay the foundation for coming years in terms of higher growth.
Right. As far as the fiscal deficit is concerned, which came in at 3.2%, is that a good number? It's still a 30 basis point contraction from 17?
Yeah, so meaning there was a little bit of apprehension among investors that government might go populistic, and they might keep the fiscal deficit target around 3.5. So to that extent, there's a positive surprise, and the government borrowing program is also much lower than what investors were anticipating. So overall, I would say that that is the biggest single takeaway from the budget, that despite all the populist pressures, government has not strayed away from fiscal consolidation path. And I think this is what is going to enthuse most of the FI investors.
Right. As far as real estate is concerned, you mentioned about that. Do you think the changes that have come in regarding unsold inventory, regarding 3 years becoming 2 years for property, they are quite encouraging, and that will increase the number of transactions?
Well, see, that's what government is intending to do, though it will depend on micro markets. So one single assumption can't be made for India. India is too diverse. But some of the markets which are looking good already, like Bangalore or Mumbai, was looking better than NCR region. So that way there could be some impetus. But largely the incentives are for low-cost housing. So hopefully, the pickup would be more in unorganized sector, which operates in tier 2 and tier 3 cities. So, it's more rural come, small towns where the incentive should happen.
Right. As far as, largely, the capital gain fears are concerned, that has not come in. Do you believe that that's a big relief for the markets? Because that was the big worry point.
Yeah, meaning everyone was worried after the comment by the Prime Minister that, the market participants should pay a fair, size of their taxes. So there was a lot of apprehension whether long-term capital gain might come in some or the other form. The expectation was that at least even if it doesn't come in, the duration of long-term capital gain would be increased from 1 year to 2 year or 3 year. So to that extent, there's a big relief for the market participants. And though Finance Minister had already clarified, but I think people were still skeptical whether it will hold on for the budget.
Corporate tax rate did not cut, nothing on any timeline of going to 25%. Is that a disappointment?
Well, see, there's a little bit of disappointment. I would say that people were expecting some moderation. Though, for companies below 50 crore revenue, he has made an exception. And that too, since the year of consideration is 2015-16, companies even who have grown to 70, 80, 100 crore revenue would benefit. But clearly, the listed space is not going to benefit at all. To be fair, I don't think there was fiscal space to do this. And clearly, with the uncertainties on revenue with GST coming in and demonetization impact, how long it will play out, I think it was the right approach by the Finance Minister. So that's why I was mentioning that whether all this demonetization and the execution which government expects to do in terms of widening the tax base, if they are able to implement it properly, probably next year there will be space for cutting down tax rate for corporates also. So I think a foundation has been laid, and let's see if government can execute properly. on the ground on what they're trying to do in terms of increasing the tax base.
As far as the borrowing number is concerned, that came in as a surprise to the street, 3.5 trillion or slightly higher than that. Do you think RBI will cut rates?
We'll see, it all depends on inflation and global, pressures. In a base case, I would think there's a 25 to 50 basis point at the max possible in calendar year 2017. So that still stays, but one has to look at the commodity prices, especially crude oil, and how the US dollar is behaving and what the Fed is trying to do. So there are a lot of variables which are there, but definitely there's scope for 25 to 50 basis point in 2017.
Right, but that is irrespective of this number. That was also the expectation earlier.
See, earlier, I would say that while Street was expecting a cut, but looking at the inflation and the global scenario, it looked very difficult to me that RBI would go ahead and cut immediately. But after this number, there's a probability that RBI might, bring it forward, the rate cut. And so that's a little bit of change in terms of timing probably.
Right. Real estate, as we discussed earlier, do you think that sector has been under problems for really a long time? And now it becomes an overweight with changes happening. Some of these companies have repaired their balance sheet. So real estate could be a theme going ahead?
Well, see, it's too early to say, meaning though the impetus has been announced and we'll have to wait and see. Because most of the listed companies aren't really doing any kind of low-cost housing. So it's not very clear whether they will benefit immediately from what government is trying to do, because all the incentives, etc., are largely for low-cost housing. So there are only few specialized companies which actually does that kind of work. But not to say that some of the large companies can now pick up low-cost housing work, given what's happening there. So overall, I would say that the outlook has improved, but it's difficult to pinpoint how much some of these large listed companies will gain out of it.
In terms of rural companies, names like microfinance, names like M&M Finance did pretty well. Do you think that was because of the relief given on Manrega? A lot of rural spending was also one of the focus, and again affordable housing, which also should happen into tier 2, tier 3 cities. Do you think all of that is keeping these NBFCs busy?
I think so. There's housing finance companies, especially which specialize in tier 2, tier 3 towns, might be a better way to play the whole story rather than playing it through cement or, real estate companies themselves. And, some of those stocks have actually jumped up quite sharply today. But one can look at, these NBFCs on decline possibly.
Right. As far as, IT sector is concerned, of course, nothing to do with the budget, but what's happening into US and the sort of correction that IT names are seeing, do you think it warrants to look at in terms of valuation for some of these names?
Yeah, so there's a lot of noise which is coming out at the moment, and some of the proposals which are not yet approved are doing the rounds in the media and the social media actually. So that is scaring a lot of investors out of IT sector. Obviously, re-rating, etc., would await all kind of clarity to happen. But at certain point in time, I think investors will be tempted if the risk-reward ratio improves, which is so. To me, it appears that probably we are nearing to that kind of a level where people might say, okay, the risks are all factored in. So a similar thing happened last year with metal companies, and we can see what kind of turnaround these sectors can have when things start to look up. So definitely another few percentage point, and IT sector starts to look very good on risk reward basis.
Right. As far as sectors, now that the budget is behind, what are the sectors that you would be overweight on? Not considering this budget, but overall, which are the sectors that you would look for, say, before the April results are out?
So, consumption is clearly the theme which is likely to play out, and consumption stocks had corrected due to demonetization impact. So I think that's the opportunity which is there right now to try and get into some of those quality consumption names. So that is clearly, the most overweight sector one should be in. The second definitely is infrastructure, where government has increased, not increased much, but has made increased allocation. So roads, railways, and the other infrastructure projects is where I think one can go more overweight. Then I think PSU banks still doesn't really merit, an overweight situation as of now, because NPL problem is not yet over, and the allocation which the government has announced in the budget is extremely small. So I would stay away from PSU banks. Maybe selectively look at some of the private sector banks. So these are the spaces where one can go overweight immediately, and then probably look for opportunities in IT and pharma, during the year.
Thank you so much, Rakesh, for taking out time for us. Always good to get in a perspective. That was a view coming in from Rakesh Arora.